Good morning, all. Welcome to Master Trader. Before we get going here, hit the subscribe button and subscribe to the channel so you get updates. So what we're looking at here is the S&P futures, so we can take a look at what's happening here in the pre-market. And on Friday, what we were looking at was this chart less this live bar right here. So one of the things, what I had mentioned to subscribers, was the way the S&Ps had gone up, and then we got this wide range bar on Thursday. So often after a multiple day run, when you get a wide range bar, it signals a short-term end of a move higher. It doesn't mean it can't go higher intermediate term, but in the short term, it does signal a little bit of exhaustion. Now, what was missing on that day was, well, where was the volume? Usually a big wide range day like that is accompanied with a big spike in volume that wasn't there. So that could possibly be even good for this market to go higher. Now, that being said, our first line in the sand for those that are short term is Friday's low. So a move under Friday's low would signal a little shock to traders. And you say, well, why is that, Greg? Well, because a wide range bar after multiple bars up is actually signaling that traders, investors are feeling like they've missed the boat. And then if they haven't participated in any of this, yeah, of course, they have missed the boat. And now, so they throw caution to the wind and they jump in, and it's usually the wrong time. And that's what this pattern is signaling. Now, of course, it could go sideways. So we always have to have rules. We can't just make a blanket assumption based on what's happened in the past. Sometimes the unusual happens, and even reliable patterns don't follow through immediately. So right now, today, we have, this is today's bar. Market hasn't opened yet, but that's what's going on today. So possibly it keeps going up. So that our lines in the sand are Friday's high and Friday's low, and then we'll see which way it goes from there. Now, looking at this chart, we could all, with any measures that we want to use, we'd say it's short-term extended and it should pull in. But is it possible that this market is ready for a little blow-off move to the upside? And if that's the case, this kind of a bar could be ignored. Friday was a resting day, and we're running back to the upside now. That being said, it's not a time to be jumping in. If you haven't participated, unless you're a day trader, this is not the place to be getting on board. Now, the NASDAQ, which had been lagging and finally got above these highs here on Wednesday, and they finally broke out to a new all-time high, and then they rested, and they're pushing a little bit higher here pre-market. And so what is showing some strength here? Well, if you remember the video, and I showed you over a week ago, about Amazon and the Head and Shoulders top that has been forming, I said, well, sometimes these don't follow through. And here was the little sell setup, and it did not follow through. It actually triggered by a little bit and then reversed right back up again. And Amazon is trading up just over 3.5 points, and it is at, let's just take a look here. Hold on. 993.50. So it hasn't cleared 1,000 yet, and that's going to be the magic line that if it can get above that. Now, generally, what we don't want to do, see this pattern here, back down to support, and then it moves back up above the high, and that's going to get the attention. That's not the place to enter. The place to enter is either on a pullback or a sideways move or some type of a failure pattern. We can get into failure patterns another day, but then we look for a continuation. As I told you, when this Head and Shoulders pattern fails, historically you're going to get a big move to the upside. So you're going to want to keep an eye on Amazon. The other, what they call FANG stocks, Google, is up today. Not too much, a couple of points, but it's moving up here, trading at 995. So up a little bit. And let's see what Facebook is doing. $172.85, up a little bit, but it's got a little wall of resistance up there. And Microsoft doing well. All right, so this is going to be a big week for the financials later in the week, Thursday and Friday. You've got the financials that are going to be reporting. So, J.P. Morgan and a bunch of others. BlackRock, Bank America, Wells Fargo, and so on. And they have been leading. Right? XLF looks great. So you want to keep an eye on those or be aware of them if you're in them, that they're going to be reporting. So, and lastly, let's take a look at what bonds are doing, because they're sitting on a little bit of support here. They tried to hold on Friday, but they're inching lower. That's actually good for the financials if the bonds keep moving down. And oil, just hanging here on the 50-day moving average after failing to push through this resistance area right there. And that might put a little pressure on the oil stocks, which had a nice little run over the last month, but up against their 200-day moving average and trading right about where they were on Friday. So no big change there. So we'll see if these oil stocks are going to pull in a little bit, how the financials are going to shape up later in the week. Amazon, what that's going to do, and generally is the market just going to march higher, or maybe start to sprint higher, or does it have a little bit of rest this week? We'll update you tomorrow. Have a good trading day.